indices, okay? So I'm really going to start from the top down here today and work our way from a yearly perspective down. So NASDAQ first, okay? And actually, before I even go into NASDAQ, I should just mention this. One thing of note that you've probably already realized, and if you haven't already, now that I say this, you might start to kind of put together the pieces. But one thing that has been extremely annoying and has led to extremely difficult price reading from my own personal perspective is the fact that we have insane divergence across the board with indices. Now, we've had this for a while, but I feel like now it's becoming even more and more paramount as we continue inside of this range. And what I mean by that divergence is you'll have one index take a low, the other one doesn't. You'll have one complete a London kill zone, you'll have one that doesn't. See, that's not really high probability conditions in my opinion. That's, typically in a perfect world, you have them all moving in confluence with one another. You'd have indices going in one direction, you'd have the dollar going in the other. It's much more flowing in that manner. We don't really have that right now. And I think that's a lot of cause for the lower time frame slop, if I do say so myself. So here's NASDAQ from a yearly perspective, and I think it's worth noting that we do have the chance. I know we're 10 months out, I understand, but if we walk through this month over month, you'll start to see how it all comes together at the end of the year. But we do have potential to create a yearly bullish imbalance as long as price doesn't see 23,114 by the end of this year. Now, is that a possibility? Of course it's a possibility. It's February, right? But while keeping this in mind as we work our way down into smaller time frames, here from a quarterly perspective, you will notice that we have an untouched quarterly imbalance starting at 23,904. That's ultimately where I think the market needs to go. And I'll explain as we go down into smaller time frames why I think the market needs to go there. Okay, I've seen even more and more complaints as the weeks go by on Twitter, and even some people in the group are talking about it. How it's just like, oh my gosh, it's like it almost feels like these like a liquid rockets in both directions. It's so sloppy and inefficient. That's why I think that liquidity is necessary. So 23,904 starts that quarterly imbalance, and just note the bottom of that is 22,934. If we were to get to the low of that quarterly imbalance, we actually would prevent a yearly from forming. Again, way higher time frame, but worth noting at the very least. Now you do have two back-to-back quarterly imbalances, which is actually a good thing. I'm really not looking for anything like overly dramatic by any means, but I think 23,904, at one point there, we were like 500 points away, and now we're kind of just hanging out. And I think you have a pretty good excuse coming up this week with NVIDIA. NVIDIA earnings coming up next week. I think as NVIDIA is one of the most heavily weighted names across the board in these indices, that I think that is a really good excuse for price to move more efficiently. Now, you heard obviously today that there were news on the tariffs. All of this to me, it was funny. Stonks in the group today brought it up. He was like, every time I see this type of action, like I always come back to this tweet. And the tweet was from 2 years ago. I tweeted, so 8:30, everybody hated the data. And then once market opened, everyone immediately changed their mind and price went through the roof, right? Like, come on, start using your head here, guys. Like, does it really matter? So, today was just another perfect example of that. You had that pre-market downside move. Ultimately, the rocket at 9:30, and then for the rest of the day, it didn't really do too much. So again, I know people are joking around calling me Phil. I'm not Phil, okay? I'm not Phil. I'm not the one who's maneuvering markets, but I do tend to pick pretty good weeks to take these mini trips. So I will say maybe that's a skill, who knows. But again, 23,904, that seems to be an area or a point of interest, especially on my end, where I think price can draw it towards. Now, when we talk about SPY, you'll notice it's a little different, okay? SPY actually is a little bit higher up in its current range than what you have on NASDAQ, but we'll get to that shortly. Now, from a monthly perspective, we'll zoom out, and you will notice that that same marking, or that same level, what the heck is going on here? Yeah, we don't want that lock, and we want to come back over here. Yeah, something's going on with TradingView, man. You click the buttons and it just like sticks on it. I don't know. I noticed that on mobile and on my iPad that every time I click like one of my tools, I would have to like manually click off of it. I don't know why it's doing that, um, but you'll see 23,904, that would be sell side liquidity. And remember, that is internal range liquidity, right? Overall on your monthly, you have an absolutely massive range, but sweeping liquidity in the opposing direction of your trend. As long as you close back above that sell side pool, that would imply that we would ultimately chase higher. So worth noting at the very least, okay? So that 23,904 still comes into play. Now, I think this is much less likely to happen. This is something that could potentially happen, that if we were to get a serious roll, we have a lot of confluence here in discount of this bullish range, right off of previous all-time high. Those are those 2024 highs, right prior to that Liberation Day discount retracement, prior to the Mando model completion. There is a bullish breaker, there is a monthly bullish imbalance, and this would be a scenario where you could potentially wick that and ultimately close back inside the quarterly. I think that's less probable than sweeping 23,904 and start making progress higher, but it is a possibility. Now you take a look over here at our newly formed weekly candle, okay, and you'll notice really not too many more answers, okay? We bounced out of the same volume imbalance that we tagged 2 weeks ago, right? This is a new week open gap dating all the way back to November, right? Candle close, candle open. That is a bullish volume imbalance gap higher. So this is the second time we got into it, but this time you leave relative equal lows, which you already had relative equal lows, right? There's no imbalance left in between this low and that low. Sketchy, okay? But from a weekly perspective, and you kind of take a look from this perspective, you realize like you don't really have any bearish levels overhead for quite some time. I mean, it's another 500 points higher for another weekly imbalance. So really, going into next week with NVIDIA, you don't have too many levels on either side from a higher time frame perspective. So I think really a lot of the price delivery that's going to be showing up next week is going to be just strictly from lower time frame imbalances. So, from an outsider's perspective, again, this week I was in and out. I wasn't really locked in as I typically am. But, just as an, outsider this week, I would say that this is probably going to be a low-hanging fruit type of week where you're really not going to get follow through until after that NVIDIA earnings report. So you'll notice we swept this high inside of that daily bearish fair value gap and ultimately closed below, okay? So we are lacking that urgency to get that continuation type of move, right? We would have needed to close above that level. This bearish daily imbalance is still technically valid. I would like to see across the board on other indices to make sure that that lines up across the board. But from what we're looking at right now, you have an opportunity at turtle souping with this bearish level still intact. There is one little volume imbalance that I should reference here, but remember, we're really not working with anything above the daily. So if we were to mount that previous buy side at 25,128, then my expectation would ultimately be that we would draw into that 278 area. Following that 278 area, you go and chase these relative equal highs, which would put you into our newly formed showtime. Now, we don't necessarily need to go here, and I would actually prefer us not to. I would prefer us to make our way down first. But this, again, is the area where there's confluence, right? 514, come on over to the weekly, and you'll notice that's that same area of bearish confluence that they would have. So is this setting up for some sort of bear trap heading into the end of the month here with February, as we only have 1 week left, right? So, I'm kind of looking into like how we can structure this with power of three ideas, like what is your accumulation phase? Well, to me, the accumulation phase really has been from November to all the way to now, right? That to me is accumulation. The manipulation move, which ideally for me would be that move through that 23,900, get into that quarterly imbalance. That's your manipulation wick, and then ultimately you would have your distribution to the upside throughout the rest of the year, which I think would be the most ideal situation. And I think that really does line up across the board a bit. When we go into some of these individual stock names, you'll notice that a lot of them are close, but they're not quite there. And actually, a few of them you could justify making moves from where they currently are. So I think that's fair, right? You have a couple that look, ready. Obviously, you'd like to have some carry throughout the rest of the market as well. But you have some individual names that are heavily weighted in the indices that look pretty good. And then you have some that don't really look as good. So we'll get to them. But But that's from a daily perspective, and then you work your way all the way down into a 4 hour, which again this is really just not a really pretty chart whatsoever. So you'll notice you have your high down to your low. You got your discount retracement, ultimately put you into a bearish imbalance. And of course, it couldn't be clean because why would it be, right? Nothing's been clean really recently. So you take a look over here, specifically on NASDAQ, okay? So as disgusting as this is, we do not take out the high of the candle that created that imbalance. Therefore, this imbalance is still valid, okay? So we do leave another set of relative equal highs. We have another set up here at 26,050. I think that's probably better off for another time. Again, we are inside of a 4-hour bearish imbalance, and you have your first, second, and third drive. We took out that high here. We did create a 4-hour imbalance, so this really to start the week is going to be my opening pivot right here. Okay, if we can get into that 4-hour imbalance and respect bullish order flow, then I don't see why we don't draw into that 260 area. Remember, where did that 260 area come into play? That is a daily bearish volume imbalance, right? It's 278, 260, very close, okay? But that's where the overlap would be in this scenario. But a failure at this 4-hour, I see nothing here that would hold this up, to be completely fair. You look left, this imbalance has been tagged 17 times, right? It really shouldn't even be on my chart at this point. And this imbalance was following the sweep of liquidity all the way back from November, okay? We did get down into, whoops, let's zoom out a little bit. Let's see if there was some 4-hour confluence there. Not really, no. No, there really wasn't even 4-hour confluence there. I guess you can make the argument for the inverse imbalance here, but not something that I really care too much about. And ultimately, again, like I said earlier, I think ultimately my draw on liquidity is lower. I don't really see why we wouldn't go and chase that quarterly imbalance while we have the relative equal lows. Now, there is one name that has been a total problem, and that name really has been NVIDIA, because NVIDIA has a very, very similar setup to NASDAQ, but it is way higher currently than where NASDAQ is. So, for example, like here, it looks better from a quarterly as well, but you see all of these lows, these are way too smooth. I would expect those to get jagged. And if you come over here to the quarterly, see NVIDIA, you have that quarterly imbalance here. But now look where we are currently. We're $20 away now at this point. So NVIDIA really is throwing a wrench in the higher time frame idea for me personally. But thankfully there's earnings, and hopefully this clears up for us by next week. So that's NASDAQ, that's indices. It's not really indices. I could go through each of them, and I really should, but let me just take a peek at the chat really quick and make sure nobody said anything. Group number is going to crush last month. I think so. Yeah, they changed their mind. Do the hedge funds usually wait till a couple of days later to crash the market after news like this? I don't know. I don't really think that has any impact. I think all the answers are on the chart, to be completely fair. Yeah, shut up and long. Yeah, we'll bring that back from last year, right? There was an hourly there. Gotcha. Okay, so it wasn't a 4-hour imbalance, but there was an hourly where we bounced from yesterday. All right, so let's take a peek at SPY, Dow, and then I want to do some of the Mag 7 names, and then I'll take requests. If you have them, put them in the chat. If you don't have access to the chat, I have a tweet before where I said just like drop your comments. It's just easier for me to go through, and that way I won't miss anybody's if you do it that way. But I got some time. We'll crush some charts tonight. All right. So let's take a look at SPY or ES, right? I'm using futures, and I always use futures because to me, I would rather have the more data, right? More data, the better. So futures is running 23.5, and the ETFs closed at 8, open at 4. There are levels being created in that overnight session. You'll see it as a gap if it were to make some big move in early London or even the end of the Asian session. But I would prefer to be more specific. I would like to have a specific level rather than that huge gap. So that is why I look to use futures data. Now the price movement is going to be the same intraday. So for example, when I trade options on SPY or QQQ, I do look at the futures ticker for that additional information. Price is going to move the same. The numbers are going to be different, yes. So it wouldn't be a bad idea to at least check where the price is. But in terms of movement, I would prefer to use the futures ticker because I think it gives you much more information to make decisions. Now, again, this is also a question that gets asked sometimes, like, oh, well, why does mine have like a red dot or something? It's like, okay, you actually have to pay for live data. It's like $4 or $6, whatever it is. And that way you get up-to-date live data throughout the day. But okay, so SPY from the quarterly. Okay, as I noted before, look at the difference between what you have on NASDAQ and SPY. SPY is like 400 points higher than its quarterly imbalance, while you have NASDAQ, which is like, it's 1,000 points, but a little over 1,100 points. But just look at the difference in terms of where we are to where the imbalance is on each, right? It's way, way different. But if you go back to last April, you will notice that when we had that Liberation Day move on SPY, you got discounted on that run. Oh, whoops. Oh, this is ridiculous, man. Come on, what are we doing? All right, low up to your high. Here's your discount retracement into a bullish imbalance. There's your run through highs to complete the Mando model. And if you go back, like, where did I have it? I think I have the monthly. Yeah, we're gonna have the greatest reversal of all time. Like, that is a textbook Mando model, higher time frame, like, just perfect setup. But there was divergence there too, believe it or not, because you had Nasdaq. Are we doing this again? No. Okay. You have Nasdaq, where if let's just zoom out for example, we were so close to getting discounted and we didn't quite get it. It was like 5 points off. So on my range actually is technically different on Nasdaq than what it would be on the S&P. So maybe you even see divergence into that imbalance. That's also a possibility here. And you might have some excuses over the weekend with potential conflict in the Middle East. You obviously have the tariff ruling today. So you have some excuses for price to drive lower. So again, I think that would just make for a much cleaner market delivery wise. Of course, a downside move into the quarterly imbalance. Where we are currently on NASDAQ, it's really not even that far. But overall, we've been just trading so poorly inside of that range really since that Thanksgiving week. Like, we just got to rip the Band-Aid off, I think. So but anyways, we'll go over to ES again. So you'll notice there's no imbalances here. You did get into that imbalance here and push price higher, whereas on NASDAQ you did not. So you have SMT off the highs as well. There is a volume imbalance here, and this is bullish. One thing that I definitely do not want to see in terms of the S&P is a monthly down close below that volume imbalance, okay? Because if you close below the open of that candle here on the monthly, that actually sets you up for a bearish order block on the monthly. Again, it's not really ideal. I would not want to see that because that could imply further downside, especially when you look left and you see you don't really have too much other than that quarterly, which on the S&P is like 400 points away. So don't really want to see that. Okay, ES from a weekly perspective. Now this is, I don't want to say kind of. It is a total mess. But if you look inside your most recent run, we did get into that new week open gap, and we've bounced thus far. There is a volume imbalance coming up on, where is it? On and look at the mess that we have going on in here. Look, all these red levels right now, these are all just volume imbalances. Those are gaps on the weekly. Like, that is a total mess. But you do have one here as well. So candle close, candle open. That's another one that's about 29 points higher on the S&P. And then from this week, you have a little mini bullish one here, but again, relative equal lows down here. There's another volume imbalance here on the S&P 6651. That would be before getting into that quarterly imbalance anyways. So the thing about this quarterly imbalance, which makes it even more annoying, is that, like, technically nothing is implying that we have to go in there, right? We don't have any higher time frame imbalance. So as much as I think ultimately we should go down into that area, there's still no weekly fair value gap or anything like that. And the reason why I put such an emphasis on this weekly fair value gap is because if you go back historically and all of these times we had these higher time frame retracements, every single one of them is paired with a weekly or a monthly bearish imbalance. There's your bearish imbalance here. There's your discount retracement. And I've done this a million times, but I can kind of go down the line if you guys want. But come back over. Where was the last bear market? Here in 2022. Here it is. There's your bearish weekly imbalance. There's your rejection. There's your deep discount. Okay, so you could do this all the way back to 2000, the .com. You could even do it with 2008 as well. So that's always something that comes plays in confluence with these higher time frame retracements, and we don't have that right now. So as disgusting as this is, I mean, you know, technically there is no weekly that is suggesting you have to get this like long term or higher time frame retracement just yet. I think it would be cleaner, and it would be even better if you get into that higher time frame level without forming the bearish level down, because then on the way back up you don't really have too much in the way. You could be pretty smooth back to the upside. So that is the S&P. Dow, very similar to the S&P, where you don't really have too many levels that have formed since. I don't even think Dow technically even has a quarterly imbalance where the others do. Let's just see really quickly. Dow is in the process of creating one, so that would be worst case scenario if it took until next quarter, which would be April, to get into it. That would be disgusting, because then you would basically just have, you'd have 5, maybe even 6 more weeks. I don't know how the calendar falls this week, but this year, but you would potentially have 5 to 6 more weeks of garbage trading like this. That would be so awful. I would definitely just prefer us to get this over with, get into the quarterly on NASDAQ, and then make some progress from there. I think that's our best bet. All right. So let me pop back to the chat. Let's see, anything change? It's all good, man. Yes, we can definitely look at that one. I'm going to go through the full list, and I wanted to do some of the Mag 7 right now, so we'll definitely check out Meta first. That'll be our first look of the night. So from a quarterly perspective, let's pop in on Meta. Okay, so with Meta, you have pretty bad lows. Nothing from a quarterly. Again, you know, you do have a bearish volume imbalance that we got into and rejected at this point. Okay, but looking further, 581, you have sell side liquidity, and there is a volume imbalance at 576 and 570. Meta has so many bad lows all the way down to 412. Now, you see I have an alert there. That would be the most ideal location for an outsider, but doesn't necessarily have to get there. That's the question I ask, and that's why we go down into smaller time frames to see if we can be a little bit more precise and make sense of all of this. Okay, so from a monthly perspective here on Meta, you'll notice you have your total sandwich here on the monthly. You bounce out of this bullish level, but you formed a bearish monthly imbalance here, and we've rejected it thus far. To me, this looks like we're going for these relative equal lows. I don't see why we wouldn't, and get into this volume imbalance. Now, inside of this volume imbalance, we did already get in, which stinks, but taking out these lows inside of it's not bad. So is there any confluence at 570? Yeah, 570 is that volume imbalance here on the quarterly. Okay, that's decent. But yeah, from Meta, like, honestly, I really am not a fan of this unless it can clean up some of those lows, you know. This is one of those where it's like, I don't necessarily think this is done just yet. You'll see we filled these bearish imbalances and have since rejected from that point. And there's been no urgency to move higher, right? We don't have that bullish imbalance to the upside just yet. Now let's see the daily, see if anything's different here. Not quite. Okay, so all we did on Meta to start, very similarly to what you saw on NASDAQ as well, where we took daily liquidity, closed back inside of a daily bearish imbalance. So really not too ideal on Meta. This would be the pivot. If you were to get up and through this level, then honestly my expectation would be a chase higher, but I don't really anticipate this being a sustained run, and that's simply due to the fact that I believe the higher time frame draw on this is lower. All right, so that's Meta. I don't think Meta's ready just yet. Now another one, again, we brought up Nvidia. Nvidia has that quarterly. I think it's worth looking at again. So big earnings week on Nvidia here. Quarterly imbalance below, that starts at 169.55. Do you see that type of action, or do we just continue expanding? Well, let's take a look at smaller time frames and see if we can come to get some a little bit more information to make a better assessment. These lows are really bad. I'm really not a fan of these lows at all, honestly. Now, I would feel way more comfortable if we could sweep those lows. I think that would be awesome. And then, even this is kind of a nightmare situation on Nvidia, I think, but you have a bullish breaker in discount of that bullish price run here, which is, it's way lower. It's 151.49. Now, here's the biggest takeaway on Nvidia, and this is annoying. The biggest takeaway for me on Nvidia is that, similarly, we don't have that higher time frame imbalance. We don't have a monthly bearish imbalance here, right? You have a volume imbalance, but if you go back and back test this historically, this isn't a brick wall. Whereas if you go back historically and test the bearish fair value gap, which we had here, this and right here, I'm sorry, this tends to be a very, very good indication that we will get a higher time frame discount. We still don't have that, okay? So that's the thing about NVIDIA. It's like, as much as I want this to go down, it's still technically not, uh, offering us any insight. There are relative equal highs up to 194.49, and then again, that volume imbalance up to 202.49. If we were to see price drive higher up towards that 202.49, I think this just kicks the can down the road, and I think we're going to be dealing with some pretty sloppy price action for quite some time. But from right here, honestly, nothing's really implying lower on NVIDIA just yet either. So as much as I want it to go down, and as uncomfortable of a long as this would be for me if I were to be long on something like this, there's really, there's not much suggesting that we necessarily need to get brick walled at this point, especially with how much time we've had spent inside of this weekly bearish level. So just another one where it's like, ugh. NVIDIA 4-hour relative equal high need to get tagged before we go lower. Yeah, so those would be the same as those daily highs, I believe, right? Yeah, probably up to 190, 194, let's see. So who knows if that would be even a potential setup early in the week, if we take that, generate the liquidity for a push lower, or vice versa. Do we chase these relative equal lows early to start the week, and then you see a push higher? I really think price action slowed a lot, and I think NVIDIA has played a huge role in that. So, all right. So the next one I want to take a look at is Tesla. Again, if you guys have any that you want to take a look at, feel free to put them in, and we'll look. But I got a list that I want to go through as well. I just want to do the Mag 7 first. So Tesla. Okay, with Tesla, you'll notice that we have a quarterly imbalance with relative equal lows to get into that quarterly imbalance. That's at 382. Discount of that range actually doesn't start until 356. All right, so that's like, again, that would be like, nightmare option where you have NVIDIA chasing way lower. You have really deep market retracement across the board. That would probably be like 22 on NASDAQ, which again, I don't think is really all that likely. I think you could just tag this quarterly imbalance and go from here. That would be the most optimal. But coming over to the monthly, similarly, relative monthly lows right now. Ideally, we would sweep that and then next month order block it, right? Close over 421 and keep this show on the road. Just keep it rolling. But again, because of how slow and drawn out this has been, you're not creating levels in either direction. It's just like something has to give here. Like, we need more information, please, right? And this goes for really any setup across the board for me personally. Now, you might have some vary outside of the S&P and NASDAQ, but right now, all three of those names that we just looked at, other than Meta, I think Meta, you can make a pretty solid argument for a odd NAM discount retracement, which would put you lower. But other than that, from a higher time frame perspective, I really don't have a valid setup for my models in particular, right? Like, in order for the Mando model, I would need a discounted imbalance. We are not in discount and there's no imbalance, okay? So the Mando model from a higher time frame perspective is out right now. Then you go into the odd NAM approach, and with odd NAM, my second model, you don't have that first bearish imbalance to the downside to suggest 50% of the range is necessary, right? Remember how I just was talking about, okay, when you get that imbalance, you can look for discount, right? This tale as old as time. You can go back on any chart and do the same thing. But we don't have that right now. So really, everything from a higher time frame right now, again, there might be a few here and there, but for the most part, there's really not too many names that are meeting the criteria for me at this time, which is just to put it, straight, it's just annoying. It's like, all right, like, can we get this going, right? And I think across the board, a lot of people are feeling the same way. It's like, patience is really being tested right now across the board. And, ultimately, I think those who are patient are going to get rewarded again, but it takes time. And it's it's frustrating in the moment because you just want to go 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 go. I got a shiny new toy, I want to use it, but if nothing's warranted, then why push buttons? There's no point. Um, so that's Tesla. Where are some of the others? I guess we could do Apple. We'll do Apple, Microsoft, and then we'll move on. So Apple is one that varies across the board. So you'll notice that Apple actually was one of the only ones that did get into its quarterly imbalance. Check that. Tagged, and it bounced very strong from that, right? That's what I wanted across the board on everything else, and we only got it on Apple. But Apple's looking pretty solid off of that monthly. But our first tag, we chase higher, we run into this bearish volume imbalance, we reject it up into this point. Do we retrace lower and drive deeper into this discounted range? Ideally, right? That would be awesome. Very, very similarly to what you see on Microsoft. So Microsoft, deep discount, as deep as you're going to get from a monthly perspective here. Now, if you were to shift monthly structure, what that would essentially be doing is getting you that quarterly discount, right? You're shifting structure here on your monthly, there's your quarterly discount. So in order for us to ultimately get that quarterly discount, you would have to shift structure on the monthly, right? That's the idea, and that's why turtle soup, that concept that we talk about, that's why it's so powerful. And it's simply just for that reason. When you do have that change in the state of delivery on a smaller time frame, it's typically just bringing you into a higher time frame discounted imbalance. So yes, it is. Somebody had just brought up that not waiting for an imbalance to form is applicable on all time frames. Absolutely. This would even that would even be like a 5-minute conceptual idea for me, right? If you don't form that imbalance down, I'm not trying to play shorts because that imbalance is what I'm using as the structural guide for that trade. And if I don't have that imbalance, there's just no point for me to do it. There's not any reason for me to be doing anything in that scenario, right? So, again, Microsoft, very similar situation to Apple. And then Amazon, also very similar. So I think Amazon was more so, yeah. Okay, so the monthly got into a discounted bullish imbalance, which is good. 211.03 is where you need to close the monthly above for that turtle soup action. I believe that would be powerful. Now you come on over here to the weekly. And from a weekly perspective, we talked about this one actually last week, and turned out to be great. If somebody go back and clip that one, maybe I'll get you a T-shirt. But last week we talked about Amazon, like, this is really the spot. You need to close back above this 197.98. This is your sell side target in deep discount. There's a bullish volume imbalance. There's a bullish breaker. So far, so good on Amazon, but Amazon is about to get into a massive weekly bearish imbalance. Now the thing here is that we've actually gotten into discount of this bullish range, so I'm not necessarily bearish on this, right? We've already gotten our discount, right? I know there's a bearish level that can slow price down. I view those as speed bumps. Is it necessarily the rejector though? I wouldn't really classify it that way. Could we reject from this point? If we're looking at the bigger picture across the market and we were saying that there's potential for us to retrace into the quarterly imbalance, I think that's a possibility. But a rejection on Amazon from here, I don't know if it makes as much sense as some of the others, whereas, just a slow grind to take, maybe like a move like this to get up and through that final imbalance here prior to making your way back up towards highs, because Amazon really has been a laggard now for like 2 years. It really hasn't performed that well. But long-term, big picture perspective, you would anticipate it being much better, right? So that is Amazon. All right. So now let me come on over here. Okay, I think the chat is all uploaded. Let's see. Let me just make sure, and I didn't miss anything. Okay, good. Great. All right. So now I'm gonna just pull up the tweet and see which ones I'm missing, and then we'll go through those, and then we'll see where we're at. So. Let's see. Yeah, I know, Snaz. I know. It's a bot. I should just block it. It's a bot. It's so annoying. It comments on literally every post in seconds. It's like the bots comment, but the 250 people we have in the group can't drop a comment to save their life. It's amazing. All right, let's do it. All right, the first one we'll go through right now is A-Lab. Okay, so A lab. Let's see. All right. Whoa, hey. Okay, so A lab got into a quarterly bullish imbalance, which is great. The lows all time are pretty bad, just to be fair, right? Like this relative equal low is not great, but bullish quarterly, that's good. That's something you can build off of. Come on over here from a uh, monthly perspective. Oh, this is a semiconductor name. Might be worth looking at SMH too. I don't know if this is in SMH or not, but it might be worth looking at the overall strength of the sector itself. You got into a discounted bullish imbalance here as well. Okay. Yeah, this is not bad at all. Okay, this is also a volume imbalance worth noting. Um, ideally you would close over that orange little dot here, right? And because that is the midpoint consequential encroachment of that imbalance. So midpoint of the imbalance, if you're able to close above it, that's showing you willingness to go higher from this point. You gap down into discount, which oftentimes leads to bullish order blocks. This name is actually pretty good. So yeah, weekly's fine. Weekly looks all right. Now you did create a little bit of a weekly bearish imbalance, so ideally you would mitigate that. And if you can mitigate that, I'm looking up and I don't really see too much untouched at this point besides that. Um, this has been filled, that's been filled, this has been filled. This bearish volume imbalance is still valid. So candle close, candle open, that's a pretty big level, but we already rejected out of that point. So um, yeah, not bad. Not bad. So now from this point, you can look at it from a number of different ways, whether you are uh, it really depends on your own like horizon for this, right? But ideally you'd form some sort of bullish imbalance on the daily time frame to suggest you would ultimately gravitate towards discount of the range, right? We don't have that right now. So you could be a little bit more aggressive and start looking at smaller time frame levels, uh, which would be fair. Obviously, if you're looking at this from like a higher time frame perspective, you'd probably want the daily to form. That would be a little bit more comforting to me, at least. But yeah, no, this is a good one. This is good structure. So good find there, G. Next is, let's see, RBRK rubric. All right, let's see. RBRK. Okay, so rubric a little different. So with rubric, we've already gotten into this imbalance. And the reason why I'm not loving that too much is because that was discounted, that was a bullish imbalance. So now what this would be is if you were to sweep this low, yes, you are getting into a quarterly imbalance that we didn't fill yet. But what does the yearly look like, right? Because that would be a shift in structure from a quarterly perspective. And the yearly, believe it or not, you actually have this. Wow. Look at that. So you do have a yearly imbalance there as well. So that quarterly sweep would put you into a yearly imbalance. That ain't bad. But I do think this one's going to draw towards that low first. The lows on this all-time are pretty bad, but at least you have some structure here inside of that. Now, following that 47.35, same idea here as what it would be with A-Lab. It would be form the first imbalance to the upside. If you could form the first imbalance to the upside, that's showing me urgency to move higher. If you have urgency to move higher, then ultimately I would be anticipating a retracement to discount of the range. Now you have a bearish breaker here. The move off the bearish breaker is from here. So in this case, obviously I don't believe this range is set. I do think that ultimately you're going to gravitate towards those lows. But from that point, your range maybe looks something like that. And, first imbalance to the upside, you could be looking at a pretty decent run from that point. So that is rubric, another pretty good one. It's close, not quite there. Z-scaler is a pain. Z-scaler from a yearly looks amazing. So we took out previous year's low. We have a yearly bullish imbalance here. Come over to your quarterly. Z-scaler, you have some pretty bad lows here that needed a little cleaning. You have a volume imbalance here from the quarterly perspective as well. This has got to stick. This is a quarterly breaker as well. I think this would be very important. The failure at this level is horrible on Z-scaler. Um, so that's really important. Now, could you justify it? Sure. Kind of gross, just to be fair, but clean up some of these quarterly lows, and then you'd want it to snap and close back inside. So I think that would be ideal on Zscaler. But out of all the names so far that you brought up, this one to me looks the worst right now. They have the lows here. There is an imbalance from a monthly at 128. Again, that would clean up all of those quarterly lows. And then from there, you'd really need to move up on Zscaler. So that's Zscaler, and then net. I think if I'm not mistaken, net looks better. Let's see. So net from the yearly was awesome. Low, high, discount, bullish, imbalance, run through highs. This is one of those old-fashioned. Where is it? The crystal ball. There we go. I think I put Ready Player One on this one. Let me see. It was. Yeah, it was. Weekly and monthly bullish imbalances filled. Ready Player One. Yeah, that was sweet. So that one, like, 300% or something. But yeah, net looks. The quarterly doesn't really look good, just to be honest. You look left, no imbalance here on the quarterly. Let's see what the monthly is. Hold on, close that. See, you have a potential to form a yearly on net, but you couldn't go to 119. That's scary. So this is like a setter year. So yeah, quarterly. You have a sliver of a quarterly here. Not really too convincing, honestly. Let's see the monthly. See if there's anything better. The monthly looks solid. This is a pretty big spot for this one. Yeah, you wouldn't really want to be failing any of these bullish levels, especially when you don't have any bearish levels overhead. That's pretty important on net. So from a monthly, discounted bullish imbalance is good. You actually technically have a breaker here, which you would want to reclaim in the next week. So over 178.15, that would be important for this one. So that is net. Next up, we have Lemonade. Quarterly. Lemonade. Okay, so on Lemonade. Okay, you don't have much from the quarterly. You got into 50% of that quarterly range, and you are rejecting at this point. It is kind of scary that Lemonade, what is that? Like just a little sliver of a imbalance there at 47. Let's see, what is it? Yeah, it's a 6-cent imbalance. So not really the most convincing. This is what we would call a mitigation block on the quarterly. So not really the most encouraging there. Let's see the monthly. The monthly has to close back inside of this. If you fail this, I think this is in big trouble. Yeah, because we hit 50% at this point. Like, honestly, all bets are off. You hit 50%. I'm not nearly as bullish as I was on this one. Once you hit that 50%, you see it aggressive rejection off of that point. So Lemonade, scary. You are in a weekly bullish imbalance. Okay, so let's see if you can close out this month hot. You don't necessarily have any bearish imbalance overhead until about $76. You need to start respecting bullish order flow on this, because right now you're essentially just catching a falling knife. You haven't really shown any urgency higher. Let's see the daily. Yeah, the daily hasn't formed any bullish level either. You rejected out of your most recent bearish daily as well. Holy crap, what happened here? Did I just completely miss this? I think I did. But yeah, Lemonade, you got relative equal lows here. Yeah, you have more relative equal lows here too. Yeah, this is really important on the daily / weekly for Lemonade to catch. Really needs to catch here, because the higher time frame's really not showing too much, and I think it's really important to close the monthly back inside that imbalance. You have this, but That's like oh shit territory right there. All right, so that's lemonade. Reddit. Okay, Reddit, another one, quarterly imbalance. Currently below it, not the end of the world. You could still close the quarterly back inside here. Let's see the monthly. Jeez, a lot of these are really getting that sharp, like aggressive scare move to the downside. Reddit monthly looks pretty good. Low, high, discount, bullish imbalance there in confluence with that quarterly imbalance. Pretty good. Weekly, okay, weekly got into the bullish level, respecting 50% of that imbalance. This is a bullish breaker here on the weekly as well. Reddit doesn't look bad. At least it's structured. So let's just see if there's a daily level that might be the go-to. You have multiple weekly bearish levels overhead. I don't think this is going to be a rocket by any means, but at least you have a good foundation for a move higher here. See, I wish it would have formed like some sort of bullish level here, and it didn't. Um, Next step really here from a daily would be get above 152.50 and close above 152.50. If you could do that, that creates a bullish breaker on the daily time frame. That's pretty encouraging, especially with this volume imbalance here. So yeah, that would be the step one. Everything looks okay on Reddit except the fact that it just has not formed a uh, bullish daily level. That's really it. If you could form that bullish daily level, I think you're really onto something on this one. So, all right, next up, SEDG. All right, let's see. SEDG. Solar Edge. Okay, so Solar Edge quarterly perspective. We got into a quarterly bearish imbalance after sweeping all-time lows. I remember this one. I hate these lows so bad, but it's okay for now. Let's see. Quarterly imbalance here that we didn't get into. See, I don't like when they do this. When you create the quarterly level and you don't get into it. Because if you remember, Iron and NBIS both did this to start off January, and then they ultimately rushed back for it. Iron in the overnight session did end up hitting that level, but they rushed back to tag it. I hate how it doesn't show up on here either. It's so annoying. But anyways, but yeah, that would be one thing that I guess I don't really love on Solar Edge here. So let's just see monthly. All right, so the monthly, there's no monthly imbalance, man. Yeah, this one's a little sketchy, a little too sketchy for me, I think. Um, that's a volume imbalance right there. Let's see how the month closes on that. But the fact that we have no bullish imbalances underneath us to catch is kind of scary, honestly. Yeah, I'm not really too thrilled about that. Um, U.S. oil. I'm just gonna look at CL because I'm pretty sure I have that charted already. Let's see CL. Okay, so CL is now in its fifth year, or what it seems to be. 2, 3, 4, 5, 6. So what is that? Yeah, about 5 years inside of this bearish level. As you can see by the colors of my imbalances, it's been a long time since I've charted this, but ultimately I think oil is going to be a big runner here this year. And again, if oil would run like that, you typically wouldn't expect tech or other things to run as well. But um, oil looks pretty good. You've stayed inside of this imbalance, essentially inversing this over the last 5 years. I think CL is pretty good. Um, so again, here, one thing that I'm not a huge fan of, quarterly low. I believe we left these relative equal. 55.12. No, we didn't. 54.98. Nice, we took it out. Dude, yeah, I think oil looks pretty good. There's no bearish levels overhead. Yeah, I don't see why oil doesn't perform well this year. Yep, there's your turtle soup. You sweep this high. I mean, this is way far away, but 78.40, over 78.40, you get that monthly breaker, and then you look left, and you're really only dealing with this one more bearish level overhead. So yeah, I like oil. Let me just see. Maybe I'll pull up some oil names. Because I wonder. Oh, no, not that. Check that yearly on Oxy, man. Alright, so Oxy. Alright, you know, I'm going to rechart this because for some reason it's all messed up. But low up to high. Relative equal highs at 73. Deep discount, bullish imbalance tagged. Respected. From this point, you have bullish imbalance. Wow. Man. Oxy looks pretty good from the yearly. Now, there is a little sliver of a yearly bearish fair value gap here. Let's see if that's in the way. Wow. Yeah, Oxy 56.49 is the next quarterly level. But I don't know how bearish I would be knowing that we got discounted. We got into a bullish imbalance from this point. Let's see Chevron. Where's Chevron going, boys and girls? I remember we talked about this one. I forgot who brought up Chevron. But it was one of these live streams. I was just like, okay, where are we going? And everybody pointed higher. So, yep. Almost. Mando model completes on Chevron at 189.68. What else? I think ExxonMobil never came down. Yeah, ExxonMobil is so gone. Oh my gosh. What else? COP. And relative equal lows is pretty bad. What about KD and Surfaces battle? Wow. Okay. I mean, technically, I know I blindly did this, but we got into this bearish level, right? We rejected it. We came down and we took out that low, and now we're bouncing. So it doesn't follow the time path, but the directional move is correct. That's great. Yeah, BP looks like 41. Yeah. Yep. So yeah, oil. Wow. Oil looks pretty good. Damn. Bro, I'm blocking this guy. Um, let's see. Hold on. Let me just go through the chat. Make sure I didn't miss any. What did I say on Coinbase last week? Sorry, I totally forgot. Let's see. I'll just do it. All right. So yeah, those are all the ones that were brought up. But let me see. Those are all the requests. All right. Let's see. Coin. All right. Let's see coin. Yeah. Oh, okay. I remember. Yeah. If I had to guess, what I said last week or whenever the last time I did a live was Coinbase sweep the quarterly lows. From here, you kind of have to get up and go, right? You want to close that quarterly above. Same thing would apply from a monthly. Swept monthly low. Beautiful. So far, decent reaction. Little scary, that 114.51, just to be fair. But otherwise, it's not too bad. Let's see, weekly wise. Yeah, weekly's pretty good too. Yep, swept the low. So far, so good. You are inside of a weekly bearish imbalance, though. And I'm not totally convinced that Bitcoin's low is in just yet, as we are now just leaving weekly lows. You have a bearish level here. We are discounted, and we are inside of a yearly bullish imbalance. That's really encouraging, but that's like a long-term, long horizon type of idea. Bitcoin's monthly here, that's a pretty, we're in the process of forming a monthly bearish fair value gap, which is also not really that ideal. I think the worst case scenario, if you do get this long drawn out downside move, would be price bouncing into here and then ultimately rejecting from that point, and even potentially chasing that would be really bad. And that's, again, like worst case scenario if we get this large drawdown across the market. But I'm not totally sold on that just yet. We have been discounted. You did get into a bullish breaker. You are discounted from a monthly perspective with the monthly fair value gap. Very slim, but at this point, kind of hard for me to be higher time frame bearish on Bitcoin when Bitcoin's inside of a yearly imbalance. The last time Bitcoin was in a yearly imbalance, we went from 15,000 to 126,000. So honestly, patience, patience, patience. That's all. So, all right, let's see what else. Core weave. Okay, let's look at core weave. Okay. Oh wow, we're really higher time frame. Hold on. Okay, core we've got into quarterly discount. That's pretty good so far. And there's no quarterly bearish imbalance forming. That's even better. Okay, core weaves monthly. You got into a monthly bearish level and you were rejecting from this point. Not great. Let's see as we go down. Let's see. Okay, so from the weekly here. Okay, so my odd NAM completed here. So you have your high down to your low. You have your retracement into discount of that bearish range, and thus far you're rejecting. This is a little suspect to me, just to be fair. We are inside of a weekly breaker, which is solid. It would have to bounce from here, or you're going to take 63.80. Let's see if the daily gives you any more clues, but daily bullish imbalance. Okay, it's not terrible. You are respecting bearish order flow, if I'm not mistaken. Let's see, did we get in? If we left those relative equal highs, then you could totally bounce here. Let's see, 172. This is 168. Yeah, you have relative equal highs into a daily fair value gap here. This is the spot right here. That's your daily fair value gap. Don't lose it. Don't lose that or you're cooked, but that would be the spot. So not terrible. If these are relative equal lows, I'm going to be scared. Yeah, I'm really scared actually. I would have preferred it to get into that bearish level and then reject down lower, but you could potentially bounce here, get this, and then roll. But I'm not sold that the bottom is in on this either. ET. I did lemonade already. Let's see. Nice. ET's pushing yearly highs. Energy name again. I think energy is going to do great. Okay. Got into a quarterly imbalance. So far, so good. Your next quarterly bear. I remember this from like 2021, 22. It was popping. Okay. So I think upside 25.36 would be your best bet. That's the quarterly bearish imbalance in discount of that range. And you have relative equal lows at all-time lows. Now, I don't know if that's going to happen, but short term, it looks fine. No bearish levels, really. You're in the process of forming a monthly imbalance. So as an outsider, I would prefer it to get into the monthly imbalance and then leave from there. But I don't know if you guys are noticing this, but there are just so many disgusting charts out there. Really. Sheesh. Relative equal lows, relative equal lows. I mean, I think this one's going to chase higher, but it's really not the prettiest of charts, in my opinion. Right, and the reason I say that is just because, like, this would be the location you would want it when it's in a bullish level. Right now, it's chasing higher. You actually swept liquidity there. There's a bearish volume imbalance here, and you tagged it to the tick. So, I mean, honestly, like, this one likely will go higher, but I don't really like the setup itself. TTD, sure. So, TTD. I should pull up the yearly on TTD as well. Hold on. Alright, so TTD currently below yearly imbalance. Not the end of the world. It could be. And I think the scariest part about TTD is that it has a yearly bullish imbalance at 1094. Your quarterly here on TTD, we're currently below our quarterly imbalance. Scary. Let's just see one thing. Hold on. Oh, so we're just range expanding. It's not terrible. This would really have to snap. It really kind of has to close the quarter back above 32, 38. If not, you have relative equal lows here at $13, which would ultimately get you into that yearly imbalance, which is at 1094. Yikes. Yeah, this one just has no urgency whatsoever. So, this is one of those ones that I tweeted a while ago. It's at 39. It's way below 39 now. Sheesh. Yeah, we were rejected out of the quarterly breaker here. Or monthly breaker, I'm sorry. There's a bearish imbalance as well. There's your rejection. Yeah, these relative equal lows do not look safe on TTD at $13. Sheesh. Software is dead, right? Isn't that what the some guy in the group, he said it like 75 times one day. We were just like, yeah, is software dead? I think software is dead. But yeah, so that's TTD. Scary out here. There's a lot of charts that are like app. All right, let's see. App got smoked, right? Uh, oh my gosh. App yearly fair value gap at $200 is insane. Dare I say it? I mean, let's see. X live 220. All right. Let's see. This is pretty ballsy. This is a yearly fair value gap at $200. Could we get that? That would be so insane. Technically, you can make the argument that we can bounce here. You would have to close the quarterly above 428.99. Let's see if anything from the smaller time frames would even imply that. Monthly, okay. Your monthly's not too bad. Yeah, I think the yearly might be a reach, but it might not. I think short term, you could bounce here for sure. Here, right? There's a lot of confluence in this area. I wonder if you create this monthly bearish fair value gap here over the next 7 days, and then you get into that imbalance, and then from there, that's like showtime. I'm kind of hands off, because if you look at this from like a drawn out wider lens, a rejection from that point, yeah, it's kind of scary. So, but yeah, shorter term, I wouldn't be surprised if you do end up bouncing, because there is quite a few higher time frame levels. Weekly, there's no weekly bearish imbalance for a little bit here. We've already rejected that bearish level. Where do we bounce from though? We didn't even tag this breaker. Ugh. This chart is kind of a mess, I'm not gonna lie. That's a rejection right there. Ugh. I wonder if you don't bounce until here. That's where the weekly breaker comes into play, and that's where this bullish imbalance is as well. Oh man, this one's scary. this one's scary too. That yearly is terrifying. Oh my gosh. Yikes. All right, well, we'll see. All right, I'll look at iron for you. I still kind of like you, hot cocoa. Okay, so we're in the process of forming yearly. Don't matter. Let's see. Yeah, so we tagged this in the overnight. Now, one thing that I usually would prefer to paint it on TradingView, right? This happened in the overnight session with earnings. You got that 28, but you didn't get it during our TradingView hours. I hate when this happens. I could show you examples of where it's mattered. I can show you examples of where it doesn't matter, right? Tesla did the same thing, got into that overnight quarterly imbalance, and took off. Never painted on here. Uh, and then I could show you others where they come back and get it. So Iron did get into that imbalance and breaker in the overnight session. Let's see if there's any urgency yet. Not quite. No. Not quite. I mean, just from this look, I understand it got to the 20 in the overnight session. From this look here, it looks like 33 is kind of hollering. Let's see. Iron here from a weekly. Weekly relative equal lows to get you into the imbalance. I understand it did it in the overnight, but it's not painting on trading view, which makes it horrible. You look here as well. You have no bullish imbalance. No urgency to move higher from this point. You do have relative equal highs, but preferably, honestly, you don't have any bullish levels here. I would prefer to just go and get back in that quarterly, to be fair. Let's just see any other time frame if there's anything here. Like, nah, there's not even a 4-hour imbalance here. Let's see. Yeah, there's no imbalance here either. I think Iron's going to go lower. Get into that quarterly imbalance. Now, I think that would be fantastic if you got this again. Like, for like a long-term idea. Like, this has lines up with your quarterly, lines up with your yearly. I think that would be wonderful. But I think it's there's no imbalances underneath it right now until here. So that's where I want it. Yeah, I already did SPY in the beginning. Bro, this guy drives me crazy. Alright, we'll look at Oracle. Enjoy it, Peter. This is your last time. Okay, Oracle, nothing has changed at all. Okay, so still quarterly imbalance. Nothing has changed at all. So we're going to keep talking about it over and over again. Like, I don't even, I just don't know. I don't know, man. It's just, you're kind of just throwing darts and hoping to be right. I mean, what was your idea for the whole thing in the first place? You know? Like, sometimes I wish I never even bring up names, because then I get all the bag holders for those names that join in, and now they ask me. It's like, you know what I mean? Like, I that's the one thing about, like, tweeting out things that I like and stuff. It's just like, because then you get, like, it's like that GameStop scenario. You tweet GameStop, all the GameStop people follow you, and then they ask you questions about it. It's like, bro, I ain't answering your GameStop questions. It's the same thing with this. It's like, bro, I tweeted Oracle once. Now this guy won't leave me alone about it. So, yeah, nothing has changed with Oracle. We're still inside the monthly imbalances. Nothing has changed. Okay? Is that good? Melly. But I will say all these charts look horrible. Alright, Melly. Melly, another one. Terrifying. No quarterly imbalances. Insight. Nothing. Terrifying. Oh my gosh. Terrifying. You don't have it. Oh, you do have a yearly. Okay, so there's a yearly on Melly at 1708. Let's see if there's any alignment anywhere. Yeah, there is. There's a quarterly volume imbalance. That's okay, at least. There's relative equal lows here. I think this one goes lower too. I mean, honestly, like, from a higher time frame perspective, I think it's pretty hard to find something. Like, again, I don't know if it's necessarily going to be this big move down, but a lot of these are extremely uncomfortable, and this would just be another one of those. I don't really think this looks good. Look at all those relative equal lows. It's scary. Scary. So, that's Melly. SE. If I'm not mistaken, SE is close. I remember this is the Bay Trader. Bay Trader talked about this one. So you have a yearly fair value gap coming up at $99. That's still obviously a little bit lower, but SE, yep, you have relative equal lows. I think those get swept. And then I have some confluence at around $89. You have the quarterly imbalance, quarterly breaker, and that yearly fair value gap. So I have an alert there. That would be ideal for me to give it a shot. But yeah, at least this one has an imbalance. A lot of these other ones don't have imbalances, so that is really, really scary. Um, yeah, I know. I'm just going through more and more of these charts, and I'm just like, yikes. This is scary. These look scary. Void G. All right, yeah, we'll look at that one. All right, let's see. Sorry, I think you tweeted that one before, and I missed it. Okay, so Void G, relatively new. Let's see. Okay. Nothing much from higher time frames right now. Let's see, smaller. Okay, you have a monthly volume imbalance. I think it's very important to close above 26.76. If you close below that, you create a bearish order block. That's not great. You do have relative equal highs above at 39.16, so that's not bad. Let's see if anything is showing you some urgency here. Not quite, no. Nah, no bullish imbalances here either. And you are coming up into a weekly bearish imbalance at about 29.69. What does that 29.69 do? Not much. Yeah, this one's see, look, here's the thing. If this, let's just say for example, this was a bullish imbalance, I would be looking at this completely differently, knowing that we have relative equal highs. But as an outsider, there's really no structural guide for me right now that makes sense. And what I mean by that is there's no imbalance where I can have my stop loss set at the low of the candle that created it. So for me to buy here, it's like where does it go wrong that it makes sense? Because I think the problem here would be, I would probably be, a little bit, I would like to manage my risk. It would probably be at this low, but you sweep relative equal lows on the weekly, you could very well bounce after that liquidity, right? So like there's no imbalance here that's going to offer me any like real insight, and that's I think problematic. So I'm not really a fan just based on that structure. It's really not too clean. So we did spy, yeah. Yeah. So anyways, yeah, I think that's it for tonight. So yeah, business as usual. We'll be back for weekly prep on Sunday night. We'll prepare. We'll get going. I think this was necessary. I think I needed to look at some of these charts. It's really eye opening. So anyways, that's all I got. Hopefully this was insightful. If you haven't already, please like and share the stream. I got to get my numbers. My engagement is in the gutter from when I was away. I don't know why, but I got to get the numbers up. So as always, if you like and share my stuff, I really appreciate it. I do. Trying to get the word out, share the message. There's a lot of people on X that would never do something like this, where they just share opinions based on actual analysis and not just kind of shoot from the hip and hope they're right. This is all the same stuff I'm showing you is how I go through every thought process for every trade that I take. So all right, anyways guys, I will catch you all later. Have a nice weekend. When you're ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions,